Good evening. This is the Elliott Wave daily update for the Nasdaq 100 and the S&P 500 for Thursday, September the 26th, 2024. Bit of a surprise. A couple of ways, the market actually did do what I was suggesting needed to happen if it was in its current position, being a third wave, and it did. And in fact, the overnight rally was one way up, and it broke through levels that left the market when we came in this morning to begin trading. It left the market at a position where there weren't any additional levels on a gamma basis, on a options flow basis, that would have forced additional buying. So without additional levels, the algorithms didn't know what to do. And so actually then it turns and they start selling. Because it goes in the other direction, which did have levels. So the levels had come up, and without having that additional above trade, it had just came down. But it did hit levels. I'm starting with the Nasdaq. I'm going to start on the 4-hour chart to basically just show I am basically obviously still looking at it more seriously as they were coming up in a C wave. There's a couple of reasons that I'm going to go with this, and just because of market action, and also because of what's kind of I hear other people really beginning to look for. I think there's a possibility that I think earnings will be fine, and they'll put that positive spin on it. But I think there'll be a lot of caution moving forward, and caution going into 2025, and caution, for the election, et cetera, et cetera. So I do think we stand a fair chance that it is a minute B wave. Let me see if I can get this to move. But a minute B wave up here as a part of the minor 4. And that would suggest a C wave. Because I believe that I don't think the market is ready that it's topped, so we get a much stronger and longer in time type of a correction. I think that is coming, but 1 degree higher, an intermediate degree, not the minor degree. The minor degree is going to be pretty hot because this was the A wave of that minor degree. So if we get up here in a C wave, we're going to at least come back, I would think, to here, if not lower. And depending on how high we would get. Now, let's go down 1 notch. Oh, so this was what we did this morning. Let me go to the hourly chart. We'll see it in all its glory. So this was it actually ends up being, I think you can almost say, well, I can count it out as if it could be the 3 of 3 and the 4 and the 5 for the little bit larger 3. Believe it or not, under my count, it'd be sub minuet. So we're getting down to the very low levels, but still very powerful and still very typical as a third wave would go. And it did take us back up, not to new all-time highs here. The S&P once again did move to new all-time highs, but it's very important to kind of encapsulate that within the framework of the 2 paths that I'm really covering for both the Nasdaq and in the S&P. So here I am still believing that we are back to putting more weight on that we're still within the minor wave 4 and still need a C wave down. So that would leave still, and I would think we could probably do it. We're probably, if we're going to be in this minor 4th wave, I think that could take us to the end of the year, or at least to past the elections. In fact, we could stay playing out up here until then. I don't think so, but the heaviness, I don't know. Whatever is sitting out there, we got the elections and we got earnings coming out. So here's the picture. On the hourly chart, we can see that we had the 1, 2, there was a 3, and this is the 4. Now you may ask, how can this might be, someone might want to count this as the internal 3 of this 3. And then I beg to differ because that overlaps that. Now, the other part is that the Sub-minuet wave 5, which is still engaged right now, it surpassed the 100% marker, where wave 5 would be equal to wave 1. So that basically, because we went up substantially above it, and I left it there so I could show you, I take it off. So, which now puts that this fifth wave now has the potential to go up here, 20,750. So between I'm going to go 25, 7, because this is 31, 725 to 750. 20,725 to 750. And that would be the fifth wave. So that is one view of this particular count, a second view of this particular count, and that involves right up there. So I'm going to drop this down to the 15-minute chart and look at this, right? If we're going to 2 and I put the 3 there, is this A of 4. Now that puts a little bit more pressure on what level this is actually at. Now, I know I was counting this as a diagonal triangle for the fifth wave. But this rally blew that right out, took it off. So it leaves a mess, a big mess. So there's one way to look at this. And in all honesty, you get the 1, 2, that I can give. A little bit irregular, but I'm taking it, and there it is, the 2. And then 1, 2, 1, 2, 3, 4, 5 of this 3, 4, and see how far that deep if that went. So this 3 to here should be complete there, based on the depth of where this cell came off of. And we're actually coming down to where we're crossing this would be wave 1. So it takes it up another notch. Is the 3 here, and that's a 4, as small as they are. Now, so whether or not I got to follow this cleanly to the 1, 2, 1, 2, and this is probably, if anything, it can't be the internal 3 because this would be the larger 4, and it's already killing that. And actually went down and cut twice over the first wave. So I have to back it up and say it is the complete 3. And so this is going to be a 4, which in essence can't break here. So are we A, B, and we're going to come down in a C wave? And if that's the case, this is how you figure out your count, by the way. You've really got to keep working all the angles and realize that if you're calling for a completion in terms of this is A of 4, B of 4, and we're going to do a C of 4, well, C, the most common C is equal to A. 20,010 breaks that. So it cannot it cannot be a fourth wave. It can be a fourth wave if it really cheats and just comes down to here. But in a way, it can't. Because yes, it does. Yes, it can. No, it can't. I'm sorry, I keep taking that back. No, it can't. Because it's in violation of the larger. So again, it presents a challenge. And again, I got to back it up and go like, well, what is this? Is it just a big 1 and it's still going to be diagonal, but a very strange looking 1? Or, so I'm leaving it as is right now because I don't want to go into all these variations. The market will tell us. And if I'm not really, and if I pull it back out and I look at the hourly chart, and if I'd have to back this back down to see all of this, most of the time, even if I take it from there, 1, 2, 3, 4, see, we get overlap. So it really either has to go stop here, and again, bringing it back down to the 15-minute chart, this and this are equal, and it has to be A, B, C, done, 4, and we rally. Now we did, but you'll see that the market did have trouble. If you were there and you were trading, the market was having trouble. Keeping pushing to the upside. So I think, yeah, we'll see about what happens. So as it stands, I could leave this as ABC and we come back down in a C wave. Because this, even if I see, I have to keep taking it down because you want to see what happened inside. Pretty much straight down. And if anything, it's an ABC. So you could, and that's a quick view. On a 5-minute chart, you're making a decision that's going to affect all the way up. But if I had to, 1, 2, 3, 4, 5. A. And it's a zigzag. Now, if I take it up to here, a zigzag, 4. That would for certain have this type of impact. So do I need to go back down? Do I need to just and I'm going to wait because I'm going to see what actually I get delivered. But how I'm leaving it for everybody for tomorrow is the possibility is that it can come back down in a C wave. And that C wave would, number one, be expected to at least come back to 20,000. 20,010 is the support, and 20,002 is the 1 hour, 200 period moving average. I will take a step back, but that would be a complete, or it can be 1, 2, and we're starting the third. And if that's the case, we're backing this all the way up, calling it the C wave. And this is the other side. It's like, okay, do I need to count it so C is done? On this level, which brings it down to a sub count. No, this is the sub count. It reached to where 5 actually should have been done, could have been done. And that's at 20,525, and it got above there. The high today was 20,251. So it did break above, but it came sailing back below. So it kind of stands, and that could either be the 3, and this is the 4, but it's a larger 3. So I think I have to kind of work this out in here, maybe a little bit cleaner. In any case, I want to just see what it's going to do. We have that potential to actually, let me go back down to the hourly chart, the potential on a larger swing. So if this is all done, and we're putting a C and the B up there, and this is going to be 1 of C coming off, well, then we're getting ready to drop in a third. Okay, so understand what I'm saying here, that if the market continues and starts to get hit hard and break this level and break back below 2,000 and just keeps going, then the tide is turning. And a lot's going to depend, because the other thing that's happening right now is that the levels, so the gamma positions and the options flow has been moving things up as the market has been rising. And then, even coming in today, there weren't any real levels left for the Nasdaq because it had gotten up. It had gone through the call wall. It had gone through the volatility trigger. It had gone through large gamma positions 1 through 4. Which pretty much all of them until everything gets recalculated. So the rally, I think, caused, I'm not sure if it was just a lot of adjusting or repositioning. And so the consequence of it falling sharply and breaking a volatility trigger, or breaking some of these large gamma positions that are now being left in place, which should provide support for a continued rally. That's the other thing. As this whole thing just jumps in price, so everything shifted up really high. Now, we sold off hard. I will say that the initial was a total rejection of 20,500. And we came all the way back 350 points very quickly. So I'm going to go back out to that hourly chart. So we came back in an hour. Bing, bing. And actually the low came the end of the next hour, but pretty much at the beginning. So an hour and a half, high to low. And then we just kind of bounced around, but we came up. So even if we're out here on the hourly and just looking, it looks like that is an A, that is a B. It looks pretty good to me. And we'll see what they're going to do. I don't know how it'll reopen. So, and here's the other thing. It could be A, B, C. Strange as that is. These are hourly charts. I don't know. I don't think I could be able to count 5 inside that mess. But you don't know. No. It's a big 3 up, 3 down. So this is an ABC. And yeah, A, B, got a C coming down. Pretty much looks that way. And that could happen overnight. They gave us 330 some odd points to start on today. So the selling was just inevitable, really. It just kind of came in when you thought, oh, where are all these overnight orders that would want people want to buy, not sell? So it was very interesting. Not sure. In any case, looking for I believe we're going to get another leg down. The initial support should come in at 20,144, right there. The size of the ABC suggests that gets broken and we do end up here, only if C is going to be equal to A, and that's 20,010. Now, from that level, it actually could just be a little bit higher level 4, and we go again in a 5th wave. And then it's going to be a new set of, well, we have to go here. We have 20,917, to be honest with you. And that's the C wave. The minute C, that's the minute B wave. So not only is it the C wave, but it's also the minute B wave would come in at the same place. And that's way up here. And that could happen. But boy, to come here and then shift, you have to fall in love with either tomorrow's expiration, then turn around and on Monday, run it back up there. So, and that, who knows? Who knows? But that would be a scenario. Now, initially, I'm thinking we should head lower. So we'll find out what the rest of the world thinks. And again, there's our markers. So if we come down there and we start to move, just pay attention to the structure. If we start to move back up, realize that know where your point is, that if it surpasses it, then we're in the next leg up. It's, that was the 4 and we're in the 5th wave up. And these are the markers here, here, and here. So yeah, if they give us another 300 from here, you're up at 20,006, 20,732, 25 to 50 is the next zone, and that's sitting right above all that, not just right above, but well above is 20,900, all in the upside potential. Continued break lower. If it goes from here and we go through 20,010 and we go through 19,793 and we just keep on going, and we have a much, much stronger, then it's a 1, 2, 3, more than likely. Because ABC should stop here, possibly there. When we start continuing, and it's not an ABC, it's a 1, 2, and we're in a 3rd. And it'll just keep going. Still could be, a 1, 2, 3, 4, 5, or a larger A, or whatever the situation is, but it'll be a C wave down if it starts to really break. And that B will go here. All right, let's go take a look at the ES. This thing, once again, zips up, makes a beautiful new all-time high, goes through that collar, which was at 5807. That was the call wall. That was a trigger. And it broke it overnight. In the future, which pretty much guaranteed that the cash was going to gap above 5750. And it did. So everything was all set for this push, this last push. And boy, was it a last push. And it just didn't get anywhere. And then they started selling. So the hourly chart, here's what I've done so far. I've left this 1, 2, 3, 4, and this is in a 5. Now, again, diagonal triangle of what? So the best I can come up with as an alternative to what we've just done is that I put the one here, and it's a diagonal first wave, and I put the 2, I believe, here. Put the 1 there and the 2 here. So it's like 1, 2, 3, 4, 5. And that would be wave 1. And this would be wave 2, and this would be wave 3. And wave 4, it can't because it's already coming over wave 1. So you can see the dilemma of the sloppiness of this pattern and not necessarily fitting into much of anything because it's all threes, and then you could break it. You break it and run straight up. So that broke the triangle, that broke the diagonal part of it. And so I'm letting it be for right now, but this broke that. Actually, the 1 is here and it just is above. So it can't come in that way. So what is also possible that the 3 moves up to here, and it's this 4, and it's going to come down to there. And that's 57.32. I don't see necessarily, unless it was a diagonal third, and that I've just not run into ever. Waves 1, waves 5, C's, and rarely A's. So again, or is it an ABC? Yeah, again, strange pattern. But I'll keep my eye on it, of course. So anyway, what I've been looking for out of this is to see where and what it needs to do. So once again, I'm going to go down to the 15-minute chart, and you can basically see it's the same deal. In fact, it's even more clear. It's an A, B, C. I stuck a 4 there because it's an ABC. The Nasdaq doesn't have that same, but it could be A, which gives a lot more room to this B wave, right, to become higher. So we may get that, which would also have to coincide with the Nasdaq somehow. We go up, maybe we get back there, and then we come back down in C wave. Or, excuse me, yeah, this is only A and this is with B, we come back down to C, but you're looking for hopefully more of a flat, not too much further this way. So we'll see what kind of happens, but otherwise this is a 4 and this is going to be a 1, and we come down in a 2, and then we go in a 3. Whereas the Nasdaq would finish its 4th wave, but possibly only come in like I was showing you. I'm sorry, I know I got to go back. It would just come back down and equal here, maybe here. So A, B, C, and then we rally. So it could fit. People are wondering. But here, it's going to be A, B, and then a C that would likely come in below this, which it can. And if it did, if it's an ABC, then 618, 57.76. So again, just below where we've already been. And a C wave can do that. It's not the most common. The most common is 100%. So, but it's up there. It's number 3, and depending on the structure. So, but if we're not looking for much from the Nasdaq, maybe we don't get that much from the S&P. It gets here, and then we do go. And that can happen overnight. Now, but bigger, they start pushing. Go back out to the hourly chart, and they start pushing. Then it has the potential that this is maybe a different degree or something different than a third. And we would start breaking below 57.24. And essentially, yes, if we broke 5,700, then it's starting to look more is that it's a larger, or this is a C wave complete. So what we have up there. Now, on the other hand, if it were seriously inside of, and I'm not sure how, this would have to be 1, 2, and this is going to be 1 of 3. Whatever finishes up here would be 1 of 3. We do a 2, and then it goes. So that's both views, actually more than just both, but more detailed one, and then the other. And right now, I really think that again, I was not totally surprised, but when I got up and I was like, "Oh, we're up 300. Okay, well done, Europe." But I would not have necessarily been expecting that much. I would think we had a chance to do our own. Let me put it that way. All right. So in the S&P, let's go up and let's take a look at the moving averages. No change at all. No change at all. Good distance between all of them, which keeps the upside intact for right now. So we'd have to see them start to break, and we'd have to see that break in 5,700 because then you're going to come down and break the 20. And breaking the 20 should shift the, at least the very daily to near-term picture. All right. That is actually going to be it. Now, tomorrow being Friday, it is an expiration. And it, I think, could be a very interesting one, considering that Monday is end of the quarter. There may be a lot of traders who are like, you know what, I'm doing it today. They're going to do it on Friday's expiration versus Monday's expiration. So we can maybe possibly see volatility on both days and in both directions. All right, so Friday we have personal income, personal spending, PCE, major. We've been waiting all week for it. Advanced U.S. trade balance in goods, wholesale inventories, retail inventories, and consumer sentiment. So this will be a busy morning for the numbers. All right, next update will be actually on, or the daily update, next daily update will be on Monday, September the 30th. I will be doing the weekly on Saturday. Have a good trading day tomorrow.